Hi, my name's Ryan Fowler, and I'm going to talk today about how to use LLCs for estate planning. Now, the most common type of business entity used for estate planning is what's called the FLP, which is short for a family limited partnership. An FLP is really just a normal limited partnership that is used in an estate planning context. And you can actually use an LLC in the same way, and we call these family limited liability companies, FLLCs, and use them just like FLPs, except there's more flexibility with an LLC. If you don't know how an LLC is more flexible than a limited partnership, I recommend you watch the free video on this site called LLC Basics, and it'll tell you why LLCs are more flexible and oftentimes preferable to an FLP. So how do you use FLLCs? What are their characteristics and how are they used for estate planning? Well, one of the things is you can put investment assets or business assets into an FLLC, and the parents who are going to pass wealth to their children, that's the estate planning part, they can continue to manage all of those assets, 100% control over those assets in the LLC, but then bit by bit they can gift interests in the LLC, ownership interests, to the children. They can even make what's called a split gift. Normally you can make a tax-free gift of $13,000 a year to each donee, each recipient. So me as a single person, I can make 5 gifts of $13,000 each to 5 different people. If you're a married couple, you can do a split gift. You can combine it. So each of you gets a $13,000 tax-free ability to make gifts up to $13,000. So you can do a split gift, you can double that and now make gifts of $26,000 to each of your children. But you're not gifting the assets in the LLC to your children, you're gifting the ownership interest in the LLC to the children, and the assets stay safely in the LLC where the children can't control those assets. You have someone else who's a manager. Just like when you use a trust, someone else is a trustee and then they manage that for the beneficiaries, your heirs or your children, so that the children can't just squander the assets. And that's why trusts are often used for estate planning. You get something similar in LLCs, except with an LLC the parents can retain control of the LLC. With the trust, the parents have to give the asset away to a trust, and you have this other trustee that manages it. If you're just doing a living trust and you're just trying to avoid probate, you can stay in control. But if you want any type of estate tax savings, if you want any type of asset protection, if you use a trust, then you have to give up control of that asset to someone else. With the trust, with an LLC, while you're alive, you can stay in control. And you can get some reduction in estate tax liability with your family LLC, just like with a family limited partnership. We call that, we use what's called the valuation discount. We're going to talk about that shortly to see how you can reduce your estate tax liability by putting assets into the LLC. Your LLC must be operated as a business, not as a personal piggy bank. There's a big landmark case came out. There's this 2005 California bankruptcy case called In re Turner. The judge basically says, listen, LLCs, limited partnership corporations, they're business entities. If you just put assets in there and there's no business purpose, you just put your personal vacation home or your personal residence or just your cash bank account into the LLC just to shield it from creditors or for estate planning, but you take the money out all the time to pay for your personal expenses instead of taking out profits like a normal business would. You take profit, you're just paying your car payment directly out of the LLC bank account, or it's just a strictly personal asset like your home. You're not using your LLC in a business context, and a creditor is going to pierce it. And this case, Strange versus CIR, that was a family limited partnership. That was a partnership used for estate planning, but they used it improperly. And this is one of the things they did. They used the limited partnership like a piggy bank. There's no purpose for it, and it failed to provide estate tax savings. Now let's talk, this is the number one tool you use FLPs and FLLCs for, is to reduce the amount of your taxable estate so that you pay less estate taxes. Now right now, 2011, 2012, you only pay an estate tax if at the time you die your estate is worth more than $5 million. And then it's a tax of 35% on anything over that. However, that's only for 2 years. President Obama cut a special deal with the Republican Congress so he can get certain laws passed. And he said, well, if you do that, then I'll give you this special estate tax for 2 years. And it's basically so that they can do all this estate planning and get all these assets outside their estate. But we have huge deficits in America. We have huge national debt. And so most planners feel that most likely after this 2-year period, the estate tax is going to go to a higher tax rate, and it's going to be taxed on a lower threshold. Now in the past, the estate tax was as high as 55% on any wealth over $1 million. And so using a family LLC to reduce that estate tax liability, it's an excellent tool if you do it right. What happens is if you take some assets and you put them into the LLC, you no longer own those assets, but what you get back is an ownership interest in that LLC. Well, that ownership interest in the LLC for estate tax purposes, same thing with a limited partnership, is usually considered worth 20 to 50% less than the asset that you put into that LLC or limited partnership. So if you put $1 million in assets into your LLC, you get your LLC interest back in exchange, but for estate tax purposes, your LLC interest is only worth $500,000 to $800,000. So that reduces the amount of your taxable estate, and it provides considerable estate tax savings. It could save you a few $100,000, even a few $1 million, depending on how much you're putting into the entity, what the size of your estate is. A lot of times we use family limited partnerships or FLLCs. We use them in combination with trusts. Right now in 2011 and 2012, you can make a lifetime gifts of up to $5 million without paying any gift tax or estate tax. And so let's say you have put assets into a family LLC. Let's say it was $1 million in assets, but after the valuation discount, it's only worth $700,000 now. Well, then you gift that LLC interest to the trust. And when you gift it, and if the trust is irrevocable and set up right, it's no longer in your taxable estate. Well, the limit of tax-free gifts you can make in your lifetime during 2011 and 12 is $5 million. But what if you were able to put $8 million into a family LLC, you get a discount and takes it down to $5 million, and then gift that into a trust to get it completely outside of your state. It basically allows you, when you use those two tools together, to really get some really good estate tax savings. And there's some other advanced strategies where we may be able to get on a person whose estate is worth $1 million, we oftentimes can get their estate tax liability down to zero through using advanced tools such as the Defective Beneficiary Tax Trust, that's the DBET, or the IDGT, the Intentionally Defective Grantor Trust. There's other advanced tools that we combine with these limited partnerships or LLCs. We may be able to get a $150 million estate down so that the estate tax is effectively zero, and we can even do it where, guess what, you'll be able to retain an income stream from that trust. So you can give the assets into these advanced trust structures, but you use that in combination with the LLC. You get great asset protection, great estate planning. You can do larger gifts than ever before. You can even retain an income stream during your lifetime from those assets you gave away with these advanced strategies, the FLLC with the DBET or IDGT. And you get great estate planning. You get great asset protection by using these tools. So that concludes this discussion on the FLLC and the valuation discount. I hope you found it helpful. Thanks.